Hi, I'm Dane McDonald, and this is Petty Cash for Accounting A. What is a petty cash fund? A petty cash fund is a small amount of money available for paying small expenses without writing a check. This is beneficial for small and large businesses as there is a lot of day-to-day expenses that need to be tracked, and a petty cash fund makes this a lot easier and a lot more efficient. Petty cash is important to a business as the current economy is transitioning to more digital transactions such as debit and credit cards. The use of a petty cash system has somewhat diminished, but it's still useful for a business to make sure you can account for all items so that you may deduct them as business expenses when it comes to tax deductions. And here, expenses include employees purchasing supplies for the office or also fuel expenses for employees. Now, to track petty cash payments, you use a petty cash voucher. This voucher is a form that is used to track disbursements of cash from the fund. Therefore, the difference between the money left and the money spent should correlate with the petty cash vouchers. All of a petty cash voucher is shown here. A petty cash voucher shows the date, the amount, and who the money was paid to. Now, if all of these vouchers were filled in correctly, the petty cash fund would be able to track how much money has gone out and how much money has gone in. After discussing the vouchers and how they are used, we now need to learn how petty cash entries are recorded. Well, to open the petty cash account, you have to debit petty cash and you have to credit cash to open the account. To replenish the petty cash account, you have to credit all the expenses that have been used over the period of time recorded, and then you have to credit the cash. As the fund is not affected, only the expenses within the fund are the affected. Now, as seen here, there is an item called cash short. Short nova is one of the errors that we encounter with the petty cash fund. These errors may cause the fund to be out of balance due to mathematical errors or people failing to provide a voucher for expenditure. Therefore, cash short nova will make up the difference to account for the missing money in the account as it's only minuscule. Another problem that may occur is in small businesses, if the petty cash is too small, there may be overspending of the fund. Therefore, this will lead to the petty cash fund being replenished too many times, or it may account for too much of a expenditure within the business. This has been my presentation for a petty cash fund. Thank you.